Morning, market chameleons and Dimitri Pargamonic. How are you doing today, D?
Good morning, Will. How are you?
Excellent. You want to get started right away with the disclaimer?
Yep. So good morning, everyone. Happy Monday. Before we get started, let's just take a look at the disclaimer really quickly. Keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to answer your questions and provide you with guidance. There's a disclaimer.
Excellent. What are you seeing this morning, buddy?
So let's take a look at the pre-market report. I think then we'll take a look at what's coming up on the earnings front, for stocks reporting today or tomorrow before the market opens. Maybe I'll pick one stock, take a deeper look into its earnings history, what the options are, expecting the earnings move to be compared to the historical moves. And if there are any questions along the way, let me know, Will. I'm going to try to answer those questions as we, before we end the show.
Excellent.
So these are stocks. Right now we're on a pre-market report. These are stocks trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look first to see what's going on in the higher market cap stocks. So I'm taking this filter, looking for stocks with a market cap of 20 billion or higher. So we see 15 made the percentage gainers list, 63 on the percentage decliners list. From that perspective, it looks like more of a bearish bias at the opening. We got Discovery. This one is actually reported earnings before the market opened. I think we talked about that one on Friday, but that's up 5.3% in a pre-market on 73,000 shares. I'm just scanning down here. Not a lot of volume in these other ones, except maybe PLTR. I see 10.8 million shares trading in the pre-market hours. There's some news out there in the morning. I'm just looking at some headline news, but can't figure out, exactly without opening up what the news is. But it looks like they're up 2.7% on 10.8 million shares. And they had earnings, I think, last week, right?
Yeah, they were down. I think they were down after earnings, but then it was reported that ARK Investments, and I think it's Kathy Woods, she's like the hottest investment investor now in the marketplace with their Tesla bet. She's taken a bigger stake in PLTR.
Okay, right, and that's relatively new IPO, right? Like, I'm just going to take a look really quickly here.
Yeah, I think it may have been its second earnings, something like that.
Yeah, so we see second earnings, it was down 12.8% when it reported earnings, starting to recover a little bit from there. And as you're saying, hedge funds or bigger investors are taking after the earnings, right? They're taking some positions in it.
Yeah.
Is that the news? All right. So that's PLTR. Let me take a look. I'm, not seeing anything else on this list that's popping out at me. So let's go on the unfiltered list. We got some small cap stocks, with some big increases. Again, this is a 28.5 million market cap stock, RETO. Looks, I'm not sure what the news is here. There are some headlines. I just clicked on it just to see its pre-market action, but we see here closed at $1.18, trading $3.26 in a pre-market hours. That's up 176%. You can see that if it opens here, that's a new 52-week high. 26.3 million shares trading in the pre-market hours with a float of 18.1 million. So that's, really a lot of volume relative to its float. I'm just going to come down here really quickly just to see if I could figure out what the catalyst might be. It's not evident, I don't want to go in there and start reading, about 36 stocks that are moving. So I'll leave that up to you to figure out like what's going on in that stock. But again, lots of volume in there, up 176 million. I'm sorry, up 176 percent in the pre-market hours. If there are no questions on the pre-market, if you don't have any specific one, Walls, I'm going to move on to earnings.
Yeah, no, that's perfect.
Okay. Let's take a look what's coming up on the earnings front. So these are stocks that are expected to report earnings in the next 2 weeks. I'm going to use this filter to look for stocks that on average trade 5,000 contracts or more per day. And let's take a look at the full report. So here's a list of stocks that meet this criteria that I use to filter. And we see here a bunch of them reporting today after the market close, some tomorrow before the market opens. So let's take a look. Since there's a pretty big list here, I'm going to try to jump to the ones with the more volume in the options. Okay. And if you have any questions or specific ones that pop up, just let me know. I'll jump to those. But this is RIG. And if you want to know what the company is, if you click on this little informational sheet over here, it pops up, gives you a lot more details on this stock. So we see it's Transocean. It's a Switzerland, based out of Switzerland. It's in oil and gas. If you want to read about it, you could read about it over here. And then you got all these other tabs, that you could click through really quickly. That allows you to do like a really quick kind of reference about this stock without having to leave the page. But RIG, that's expected to report today after the market close. That's straddle. So when we look at the straddle, buying the call, buying the put at the money, that's looking at the magnitude of the move, right? So you're paying premium for both call and put. So you need the stock to move in either direction by enough to cover that premium. So right now, that straddle is implying a move of 12.6% in either direction. We could compare that in the last 4 quarters after the stock reported earnings. On average, up or down, it moved 9.5%. And in the last 12 quarters, the average move was 6.8%. So if we look at the implied as a ratio of the 4-quarter average move or the 12-quarter average move, we see it's 3.1% above the 4-quarter average, 5.7% above the 12-quarter average, and the high move on that stock in the last 12 quarters, 20.9%. Let me kind of slide down to the companies that trade a little bit more options. So OXY, that's also in the oil, right? We could click on it, oil and gas, that's Occidental Petroleum. Let's take a look at that. So that's today after the market close. That's the expected earnings announcement. The straddle as of Friday's close, we're not open yet. Friday's close, the straddle's implying a move of 8%. That compares to a 6.2% 4-quarter average move and a 4.1% 12-quarter average move. So we're 1.9% above the 4-quarter average, 3.9% above the 12-quarter average. The high move on that stock in the last 12 quarters, 12.5% after reporting earnings. Let me see. MRO, also oil and gas. So we've got a bunch of them now in the oil and gas coming up, which will be interesting to see how they compare versus each other or what's going on in that industry. But that's expected to report today after the market close. Straddle's implying a move of 9%. That compares to a 4-quarter average move of 2.8%, 12-quarter average move of 4.3%. The high move on that is 8.7% in the last 12 quarters. So that's in MRO. And of course, this kind of even gives you a relative comparison, how much higher, within the same industry, the expected move is relative to the historicals or even relative to the high moves, right? So for here, MRO, it's almost right there at its 12 quarter high. Let's move down to Home Depot.
Sure.
So Home Depot, That's tomorrow before the market opens. That straddle's implying a move of 3.8%. The 4-quarter average move in Home Depot, 1.9%. The 12-quarter historical average move, 1.8%. So we see about 2% above the historical realized moves. The high move on Home Depot, 5.4% in the last 12 quarters. So maybe I'll take a look at Home Depot. We'll take a look at we'll take a look at the earnings, what they reported last quarter, what the stock did, how the stock tends to behave. I'll take a look a little bit at its earnings history, unless you have other stocks.
No, Home Depot's a great one to go after.
Right, we'll go after Home Depot. So let me do a couple more tomorrow before the market opens, and then I'm going to go to Home Depot. So HSBC, also tomorrow before the market opens, straddles implying a move of 5.2%. That compares to a 4-quarter historical move, average historical move 3.6%, a 12-quarter historical average move of 3.2%. So the implied is 1.6% above the 4-quarter average, 2% above the 12-quarter average. High move on Home Depot in the last 12 quarters after reporting earnings was 5.6%. What's this? Macy's, also tomorrow before the market opens. That straddle implying a move of 11.8% compared to a 4-quarter average move of 3.1%, a 12-quarter average move of 5.6%. High move on Macy's in the last 12 quarters, 15.9%. After reporting earnings in the last 12 quarters. So if you don't have any questions on this stuff, well, I'm going to go to Home Depot.
Great.
Let's see what Home Depot is doing. So we got a couple different ways to look at Home Depot from about as when we look at earnings. We'll take a look at historical moves, we'll look at it from the perspective from options. We'll also take a look at it from the perspective of, how their earnings profit ratios, how their earnings growth compares to the overall market. All right. So we'll take a look at it, and spend some time on it, just kind of getting a picture of what's going on in Home Depot. So from the options perspective, we're gonna first take a look at what the options anticipated the move the day prior to earnings when we're looking at that straddle. Remember, buying a call, buying a put, versus what the actual move was. So when we look at these bars here, you see them going up and down from zero. That's saying that this is the expected move in either direction. So here we see I'm hovering over it on November 17th before the market opens. The Home Depot reports earnings. That day, by the end of the day, stock was down 2.5%. The straddle was implying a move of 3.1% in either direction. So you could see that move was within the range of what the straddle was implying. If we take a look at something like this, where we see the red bar coming outside this bracket. So on November 19th, 2019, Home Depot reported earnings. That day, the stock was down 5.4%. The straddle the day prior to earnings was implying a move of 3.1%. So if you sold that straddle, you would have been a loser. You'd have to buy back higher by the end of the next day. If you bought that straddle, it would have been profitable from the buy side, because you see that move exceeded the implied move by the straddle. When we see a green bar like this, that's when the stock did a move to the upside. So on August 20th, 2019, before the market opens, Home Depot reports earnings. That day, stock was up 4.4%. Straddle was implying a move of 3.4%. So we'd see that on that day, that move exceeded the implied move as well. So let's take a look, though, what it does on average, because these two particular days, it broke through the expected move, but a lot of times it kind of just does, to me, just looks like most of the time it's within there. So here are the longer term statistics for the last 12 quarters. 83% of the time, the straddle overestimated the move. In other words, the implied move heading into earnings was higher than the actual realized move. On average, the straddle heading into earnings, the implied move was 3.7% either direction. That compares to a realized move in either direction of 1.8%. So there's, what's that, 1.9, almost 2% differential between implied and realized. Okay. If there are any questions, let me know, Will. But
I will.
Going. What about the implied volatility? So this is what the implied volatility tended to do after Home Depot reported earnings. So we're looking at an option that has 30 days to maturity. Okay, so that's what we're measuring, 30 days to maturity, not the near term, because the near term options are mostly gamma. So you're looking at mostly their pricing in the move. As you go out further, out in time, there's more vega risk. The implied volatility matters more. So we're going to benchmark this to the 30-day constant maturity. So this is what it tended to do. Day after earnings, implied volatility declined on average 16%. Day before earnings, average implied volatility 25.4. Day after, the average implied volatility dropped down to 21.4. 5 days later, it was right around the same spot, 21, a little bit lower. So we could see here 25.4 the average. Right now we're at 24 point, oops, hold on. 30, we're at 26.8. So close to where that average is. And if you wanted to go down and just take a look at the ranges, you could see here the high low range for 2 days before with average 25.9. And this is how it kind of progressed as it went on. So that's from the options perspective. Let's take a look. I'm going to take a look at what they reported last time. So this is its estimates versus actual. So you can see here that the last earnings, November 17th, the stock, it was the analyst consensus was $3.05. The stock reported earnings was $3.18. That beat by 13 cents. The revenues, the expected revenues was 32 billion. They reported 33.5 billion, so that beat. So what we see here is though the stock was down 2.5%. And I kind of try to show this every day because, you know, there's always this anticipation, oh, if it beats, the stock is going up. If it misses, it's going down, but that's not the case because there are two reasons. Number one, there might be more than two reasons, but the biggest reason though is that this beat, it's only one metric and doesn't tell you the full story of the report, right? What's behind it? What is management saying about their future outlook? So this one earnings beat might be good, but really the important thing is, well, how does the company look going forward? You know, what is management saying about going forward? How are they guiding us? What are they talking about their business? So, and how did they get to this number? What's in this number? All that is important, and that's within the management's discussion. And so you could go kind of press here. That's the press release for the previous earnings announcement. So you could kind of go through it and read through it, see what they're saying, and through these numbers. I'm not going to do that right now because there's a lot here to look at, and I wanted to cover more stuff. But again, it's important to kind of read through this, understand what they're saying, and how they're guiding you going forward. So you can see here, beat on these, miss on there. Let's take a look at, okay, and then the other reason is that even if they beat, right, one thing to keep in mind is that the stock price does not reflect what the analysts are covering. Like, this is analyst expectations that don't probably don't even have any stake in the stock. They're just putting out this number. This is what I expect. A lot of times it's from what the company is guiding you. But the stock price is reflecting traders' anticipation, what the stakeholders are expecting. Okay, so the stock price doesn't necessarily have to, are agreeing with any of these numbers, or they might not even care about these numbers. They might be looking at something completely different, because in some companies, it's not the earnings per share that matter. It could be just the subscription growth, or how far along they are, getting approved some products or pipelines. So it doesn't, this number, you got to take it, with a grain of salt. But let's take a look at what the traders might be anticipating. And there are a couple ways to do that. One, we want to see where where today's valuation is versus historically where the company was valued, and what did it do since its last reported earnings. Excuse me. Well, so let's take a look at its fair value. So we see here Home Depot. Right now, that's the market price, $279.64. If we use the historical multiples, we think that that it should be around $280.65 on average. So it's really right there at its fair value. And how do we get that? Well, we take a look at historically, where was Home Depot? Where did it trade versus the multiple of it versus its earnings? In other words, if we took its market cap divided by its total earnings, what is the average multiple? So the 3-year average, 22.8. If we use that, that's the implied value of the stock. We could also take a look at its historical market cap versus its revenue, total sales, right? So the 3-year average is 2.2. If we use that, then the implied value is 258.17. Then we could go and say, well, where is Home Depot relative to the rest of the market, right? Because the market could be expanding multiples, contracting. So let's then make it relative to the rest of the market. So here we see that right now, Home Depot's PE 24.2 versus SPY, which we use as a benchmark for the rest of the market, 35.3. That's trading at a 32% discount to the market. On a 3-year average, it traded at a 20% discount. So if we use that as our benchmark, that's the implied value. And we'll do the same thing, price to sales. So price to sales, we see right now it's trading at a 14% discount to the S&P or SPY. Historically, it traded at a 16% discount. So we revert to that. We use that as our benchmark. That looks like implied value $273.57. So if we take the average of these, we're at 280.65 right there. Okay. So really, I'm not, according to this, it's really priced where it usually is, on average, if we use the historical multiples. Let me take a look then on the post-earnings drift. Actually, before that, let's just take a look at their earnings. I'm going to take a quick peek at how does Home Depot, how are their profit margins and growth compared to the rest of the market, right? So I'm going to take a look at this summary. I don't think this is not available yet, so we're still working on this, in the rest of the tabs. But since we're talking about Home Depot, let's just take a look. So here are Home Depot's gross margins. So this is for, every dollar in sales that they have, how much do they get to keep, if we take what it costs them to produce that product. So this gross margins. So that's 30, they have 34% gross margins. If we compare that to SPY, 32%, S&P 500. So that's 2% better than the rest of the market, which is pretty good. And we could see here that Home Depot, that's been pretty stable year after year. Its let's come into operating margins. So operating margins is that's their profit margins from their core business, right? From their core business. So there are other profits that you could make that's not from your core business, like you sold an asset, made money, you made an investment somewhere in a stock, you made money, but how much profit what are their profit margins from their core business, what they do on a daily basis? So that's 14% in Home Depot. We compare that to SPY, 13%. So that's like right kind of in line, a little bit better than the rest of the market. You could see here, it's relatively stable, around 14, 15%, a little bit, declined a little bit from 2019, declined a little bit. Let's take a look at its growth. So this is how much is it growing relative to the rest of the market, because not only do you want to see good profit margins, but you want to see growth, right? You don't want to see something stagnant, or we could also compare not only its growth, but we want to see how it's doing relative to the rest of the market. And I'm just using the S&P 500, but you can change your benchmark over here. So let's see, Home Depot right now, in the 1 year, its total revenues, total sales grew 13%. SPY down 1%. So you can see here with the coronavirus, it wasn't negatively impacted as in general the rest of the market. And we can see here 3-year average growth rate 8% versus S&P 5%, 5-year average 8% versus SPY 4%. So it looks like from that perspective, it's doing better than the overall market, exceeding the overall market. What about net income growth? So last year, that grew by 12%. You could see net income in the S&P 500, they're impacted heavily. That was down 25%. But even on a 13-year basis, in a 3-year basis, 5-year basis, it exceeded growth versus the rest of the market. What about operating income? So remember, operating income that's their income from their core business, right? So from their core business, they grew their profits by 10%, SPY down 14%, 3-year average 7% versus SPY 1%, 5-year average 9% versus SPY 2%. So you can see Home Depot pretty good, right? Pretty good versus the rest of the market. If we take their profit margin and growth, that's pretty good. Let's take a look at what Home Depot did since its last earnings report. So this is where we also take a look at how much enthusiasm or pessimism are traders pricing in heading into earnings. So the way to do that is we use the following benchmark. After a stock reports earnings, like Home Depot, people get to listen to the management. They take a look at what the new earnings, what the earnings are, what the profit margins are. They get the entire report, and then that day they could input that into their model and reprice it. So you'll see a big either positive impact or negative impact. After that, the stock will tend to drift till the next earnings because it got about another 3 months in between, and that's expectations being built into the next earnings announcement. So we see here, since the last reported earnings, Home Depot was up 3.2%. So drifted slightly, up 3.2%. The average move between earnings in the last 12 quarters is up 6%. So we see that's more muted. And a 1 standard deviation move is up or down is 5.6%. So we see that it's within a 1 standard deviation. So I would say there's not a lot of optimism or pessimism being built into this earnings. It's kind of like within its range. And let's just see what happened. See the last quarter. So we see that it did have a small negative drift. We reported earnings, even though it beat, it was still down 2.5%. So there might be something they're saying in there in that press release that's got people concerned. So we see that those valuations haven't been expanding. It's kind of just sitting with historicals. Well, we're at 929.
Yeah,
know,
we got Mike Moreau, who's one of our longest running chameleons. Just wanted to see if there's anything in AAL showing up for bull credit spreads real quick.
all right. What's that? AAL?
American Airlines, yeah.
What is he looking at?
Bull, he wonders if anything's showing up in the bull credit spreads.
You could go here, just summary, trade ideas. And here's some bull, excuse me, bull put spread. Sorry, I'm losing my voice.
No worries.
Bull put spread here. So it found selling the 18.5 put on March 5th, buying the 17.5 put March 5th for a 41-cent credit. We think it's worth 25 cents theoretically using historical stock behavior. So that's a 27.5% edge because you're selling it above where theoretically we think it's worth. And that's a historical probability of success of 74%. Here's
great job, D. We got him one. That's the best we could do. It is 9:30. The market's opening. Thanks so much, my friend.
All right. Thanks everyone for joining us. Hope to see you guys tomorrow. Oh, we do have a webinar tonight, right at 6 o'clock, 6 p.m. Eastern on benchmarks. If we don't
maybe we'll use AAL as an example with the strategy benchmark so we can take a look at that.
Okay.
Cool.
All right.
Thanks so much. Have a great day, everyone. Safe trading.